Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a look at the US election and market impacts. Polls are split on whether there'll be a Harris or Trump victory in the 2024 US election, while when it comes to financial markets, volatility is the clear winner. This chart showing cross-asset volatility has rarely been this high ahead of a US presidential vote. Meanwhile, Peter Maguire from XM told AusBiz FX volatility will be the clear winner, with the Aussie dollar expected to whipsaw as the results come in. Onshore yuan volatility hit a record last week amid hedged bets that a Trump 2.0 presidency could hurt China. When it comes to trading equities, Bloomberg data show implied volatility on the S&P 500 is significantly higher than realised volatility as investors prepare for potential fluctuations in the market, even though the index has posted 29 sessions without a drop of more than 1%. Some trepidation of the so-called Trump trade started to filter through as polls show Trump and Harris neck and neck. A gauge of the US dollar fell the most in 6 weeks as election week got underway, while Treasury futures rose. But Chris Chen from American Century Investments told AusBiz investors shouldn't let the elections dictate their investment decisions.
But I think, investors should really try to keep, that emotion and the headlines away from our investment decisions. We look at the U.S. elections, it can have very important implications on earnings growth, on inflations, on rates, et cetera. But, in general, if you look at the past, right, it's just not a good sort of risk return type of bet to invest based on expectations around the elections. And so, you have to get many things right. Like you have to be right on which candidate's going to win. You have to be right on what they might sort of implement in terms of what they've promised, and also you have to be right on whether or not the market has priced it.
Meanwhile, Morningstar's Lachlan Holloway says beware of black swan events that have nothing to do with either candidate's policies.
We went back to the start of the Biden presidency and we said, well, what are the big sectors that might do well over the new Democrat administration? You probably would have picked things that were generally sort of ESG friendly. That was a big part of the agenda. And also, the renewables transition. But the biggest performer actually of those 4 years was energy, which is oil and gas. Now, who would have seen that coming? Probably not many people. Obviously, that was related to the Ukraine crisis. But you can see how things can just get absolutely torpedoed by these sort of black swan events that come out of nowhere. And even if you look further back into Trump's presidency, again, he's an America First candidate, and the US small caps, the bellwether for that theme, underperformed the large caps over there. So it's quite hard to pick how things are going to play out. A president obviously has an impact, but it can be quite slow moving and hard to read.
Under Trump's last presidency, America's trade war with China impacted Australian exports of beef, wine, barley, and other commodities. The risk is that could be repeated, with Trump vowing to levy a 10 to 20% tariff on all imports to the US and a 60% tariff on Chinese imports. Resource stocks and the Aussie dollar would be likely hit hardest in such a scenario.
It does launch a trade war. It would be an absolute disaster for metals prices, because you're going to have to redo global trade flows. China will have to find new markets. It will have to do a whole range of things. And that will just be very bad for steel, copper, battery metals. All those kind of things are horrendous risks.
Well, the removal of Chinese tariffs on Australian exports has been seen as a positive for Australian wine producer Treasury Wine Estates. Most analysts bullish on the stock, given trading conditions with China have now returned to pre-pandemic conditions. The average target price on TWE is $14.14, according to Refinitiv, suggesting the stock has a further 25% to run from current levels, and the average recommendation is a buy. When it comes to the energy sector, Trump has promised to boost domestic energy production, which could drive demand for crude and gas. Harris, meanwhile, is expected to focus on renewable energy, which could disrupt traditional energy plays and support stocks linked to cleaner energy initiatives. Morgans has a bullish position on oil, with expectations Chinese growth will recover and the US economy is robust enough to sustain improved growth post-election. The broker has an ad on Australia's Woodside Energy with a price target of $33, which is a near 37% gain from where the stock is currently trading. Defence is another area for Australian investors to gain exposure to election outcomes. Both candidates are likely to support defence spending due to ongoing geopolitical risks. The average target price on Drone Shield, which is an AI-based platform for protection against advanced threats such as drones, is $1.20 according to Refinitiv. That's a 26% upside from where the shares currently trade. The average target price is a buy. The Australian healthcare sector could also benefit, with Trump expected to support a more free market, while a Harris administration is expected to lower drug prices, which could help expand research and development in the space. ResMed shares are a buy according to Refinitiv if the elective government prioritises healthcare access and support for chronic conditions. Analysts see a boost in demand for ResMed's products, such as sleep apnea devices and cloud-connected respiratory care solutions. And that is your IG Macro Intelligence for this week. We'll see you next week.